Flagship product over here at YieldMax. This is my number one holding at YieldMax, which is NVDY. Paying out $1.02. All over Twitter this morning, people weren't happy about that $1.02. They thought it would be like $1.89. Hello, YouTube. How are you? Thanks for joining me today again on the channel. This is Health and Wealth. My name is Mike. Let's discuss Group B's second ever announcement here, distribution announcement. Came out early this morning, right around 6:55 a.m. If you're not yet on their subscription list, go to the website. Hit I think it's the contact us button. You fill in your email, and voila, you're getting emails about distributions at 6:55 in the morning on the distribution announcement date. So today was the day. Let me tell you, it was a bit of a day today, wasn't it? There was a lot going on in the world. The stock market definitely took off today. Is it sustainable? Who knows? Only the future will tell. But it was a big day on my portfolio. I know it was a big day on your portfolio too. And so very exciting. So before we jump in, shout out to those that are new to the channel tonight watching for the first time. A few colleagues of mine are probably tuning in today. So hello to you. Thanks for being here. Let's go through all of the different distributions. And before we really get started, I want you to know I'm also going to put chapters of all of these down below. So if you want to skip to the funds that you really care about, in the description is the chapters. Hit the description, and then you can go there. Also, appreciate new subscribers, the viewers, the likes. Hit the like button on this video, and also memberships are available if you want another way to support the channel. One last personal thing: Tom Brady Green Jr. is back in the house. I had him outside all day getting sunlight, so you are welcome, Tom Brady. All right, so the headlines this morning: YieldMax ETF announces distributions on MRNY, Phoebe, Dips, YMAX, YMAG, and others. Their flagship product, their number one product, isn't even on the headlines, probably for a reason here, but we'll go through all of them. First one is our weekly ETFs over at YieldMax. So we have YMAX and YMAG. YMAX here, 11 cents is paying out this week, distribution rate of 36.43%. YMAX here, you can see all of the other weeks that is paid out, and actually I'll zoom into those so you can see them a lot better. But considerably lower than every other week so far. 22 cents was last week, 22, 17, 20, 20. So what happened here? Why did it go so low? But also, let's take a look at YMAX, the ETF here, on the stock chart. You know, up 58 cents today, 3.39%. I think almost literally everything was up today. Tell me a stock that went down. But yeah, if you look at the last 5 days, it's hovering here. You know, even the last month, it's up 1%. So it's an up market at the moment. Knock on wood. But yeah, 1770. So it's pretty steady. It's not going down that much in price. Up 1%. Still paying out a dividend. But I mean, if I had 100 shares in that, would I even care about 11 cents? Maybe not, right? If you had 1,000 shares, would you care about 11 cents? What's that doing for you? How does that compound weekly, monthly, annually for you? 11 cents is pretty weak, but I mean, if it keeps the price of the ETF stable, then go for it. And I do like that they appear to have only paid out what they made, so that's good too. They're not paying out more than what they've made in option income there. So that's going to be your YMAX. Let's go on to the next one here, which is YMAG, paying out 20 cents this week. So pretty good job by the YMAG crew over here. You can see it's its highest week in the last 3 here. A month ago it was 22 cents. So I'd take a 20-cent dividend on YMAG all day long. That's pretty good. 20 cents, also 56% distribution rate here. If we take a look at YMAG's chart, it is looking very good. 1948. If you're new here, a lot of us at the YieldMax, a lot of YieldMax investors are used to downward charts, and as we go through all of these up here, you're going to notice that Downward charts are not exciting. They're the opposite of exciting. And so having a chart that's kind of stable here looks pretty good. Plus, it's paying out a good dividend every single week. It could be a good building block for you. Like always, this isn't financial advice, just a guy on YouTube talking about what he sees. So, what do you like about YMAG? You know, the Magnificent Seven have all been doing very well in the last 5, 6 months here or longer. So, YMAG looking pretty good on that distribution for sure. Let's move on to the next one, the flagship product over here, YieldMax. This is my number one holding at YieldMax, which is NVDY, paying out $1.02. All over Twitter this morning, people weren't happy about that $1.02. They thought it would be like $1.89, closer to the $2 mark. And yeah, I can agree with that. Dollar two is, well, let's go take a look at it in YieldMax's website here. $1.02 is the lowest payment. Hold on one second. Since January, it's the lowest payment, right? So we're so used to it being higher. I mean, last month $1.09. Remember, YieldMax has decided to do credit call spreads. I'm wondering if that is part of the reason why. Whenever YieldMax fails at their weekly calls, we don't make as much money. When they do well with the synthetic, we make money. But I don't know if they did very well last month. And I mean, I think I could probably answer that with $1.02 dividend here. They didn't do very well on their weekly calls. They were probably too tight, and then their credit call spreads were too far away. So not making any money on either of those things. So that's a problem, right? So if you let's go down and take a look right now. Let's do it live here. I'll scroll all the way down here. Let's take a look at their holdings this week. Synthetic there. There's the November 8th. That's the November 8th. Okay, so here it is right here. $139, right? And then they got the credit call spread at $149 right there. So it's $10 more. Yeah, that's not terrible, to be honest with you. That's not terrible at all. What if they just made it $5 more? So we would capture $5 upside if NVIDIA went up, and then the credit call spread would take off after that. What if, right? Would that work? I don't know. I don't make the kind of money or decisions that these guys do over at YieldMax, but it's just a thought. That's for sure. I want to come back to NVIDIA after because this is my main position. I'm going to make another video tomorrow about NVIDIA and what I plan to do with this month's distribution. What am I going to do with it? Where is that money going to be allocated? I thought I was done with the NVIDIA building of the castle, trying to get to $500 per pillar, 6 pillars. So I've already got one completed, so I thought, and I'm working on the second one right now. But yeah, you can't be too upset with the price of NVIDIA today, just steadily growing. Just make sure everybody understands that come the payment day, or sorry, come ex dividend day, which is tomorrow, that the share price will drop that $1.09. Now, if the market continues to go up, then obviously that price isn't firm at $1.09. It could go up as well. It could go down more if the market drops off. Let's do the next one here. It's Dips. Speaking of dropping off, Dips paying 61 cents this month, 54% distribution. Dips is going to be the opposite of NVIDIA. It is a short seller of NVIDIA. And so paying out so far $1.21, 68 cents there as well. Yes, there it is. The loss capping works only if NVIDIA share price rises. Gotcha. All right. So again, let's take a look at that 61-cent dividend. If we go ahead and look at it, it's the lowest one so far. NVIDIA just steadily climbed upwards this month. So a short call play is difficult to do in an up market. So right now it's at $14.10. This thing came out, 3 months ago at $20. Well, July it came out at $20. Since then, it's been down 31%. For me, it's not a buy for me. It's hard to play the short side on a rising stock, in my opinion. Um, it's nice to get a dividend for sure. A lot of people do the hedging, right? They do the dips in the NVIDIA, so you get the best of both worlds. But the share price here is kind of showing that you're not getting that great of a world here over here. Just my opinion on dips. Let's do the next one, Phoebe, which is a Facebook play here. Phoebe FBY paying out 83 cents, 55% distribution rate right there. Yeah, pretty good, 83 cents, not too bad. Although, would it be better to play? Um, would it be better to play Facebook itself? And I think the answer is yes on that one. But everybody loves the income, getting that monthly income, right? So this month's kind of nestled in there towards its average. Um, yeah, yeah. I don't know. I'm not in this one, Phoebe. Meta, Facebook, just a beast of a company doing very well. But yeah, I'm sure if you're in Phoebe, you're happy with the consistent paying here. It doesn't appear to go up too high, down too low over the last 6 months here. You're probably, you have 1,000 shares. You're happy with the dividend you just got there, or you're about to get from Phoebe. Taking a look at the share price itself of Phoebe, $19.60. So that's pretty decent. Again, we're a lot of the community is happy when it's a stable price and it's still paying out a dividend. So if you had bought into this fund at $20, a year ago, um, you'd be happy. It's down 3% since then, but you've brought in a lot of income with the distribution so far. But my comment was, would it be better to be in the underlying stock with Phoebe? Facebook, Meta? Yeah, it definitely would have been better. You would have made a ton more money with the upside of Facebook for sure. But a lot of people that are watching these videos are in it for the monthly income, which makes sense to me. I'm with you on that one as well. Next up, we got GDXY, the gold play, paying out 48 cents this month. GDXY itself, let's take a look at it past distributions. This is its fifth payout. It's its lowest payouts, 60, 60, 57, and 79 so far. GDXY itself down about $4 since its inception here at $20 in May. So 16% down, but it's paid out now 5 distributions at 60 cents and above each of those. So that's pretty good. Again, this month, GDXY paying its lowest 48 cents or 36% distribution. For me, I'm trying to make as much money as possible over the next few years, and 36% is not going to cut it for my goals here. So, not in GDXY, not really interested in it at all at the moment either. Next up is a new high flyer for YieldMax, BABO, which trades with Alibaba. This month paying out 82 cents or a 50% distribution. I think you can see a theme down that row right there. BABO itself, 80. Ooh, its lowest distribution so far. Sorry, that's a lie. It paid out 70 cents, $1.29, and then now this month it's paying out 82 cents. There you can see it highlighted with the blue line. So 50% payout. BABO pretty steady. Let's go look at the share price itself. Alibaba has done okay itself. If you look at since it came out, it's up 50 cents. Now, it did have a huge peak up there, all the way up to $25.47. But since then, it's come down to $20. I'm happy if it sticks at $20 and I'm just making my monthly income. I like steady, that's for sure. Steady yet paying a good dividend, 50% distribution rate. You can't go wrong with that. As long as they continue that steady state of the ETF and still pay 85 cents every single month, or 82 cents in this case, I'd be happy with that. That's for sure. That is for sure. Next one up, JPMO, JP Morgan play right here. Let's take a look at what it's done. It's going to pay out 35 cents, only a 24, almost 25% distribution rate. JPMO on YieldMax's website, you can see it's consistently fairly low here. Again, for me, I'm a Canadian investor. I have to pay tax on these. This is not going to be allowing me to be able to make any real money, right? So I'm not in JPO at all. But if you take a look at the ETF's price, again, it's steady, which is good, 1935. over the last year here, 1934, 1935 right now, up 12 cents in the last year. But remember, people aren't in this for that 12-cent share appreciation. That's a bonus. 37.52, 37.22, that's what they're in it for. And I say it with a smile because, again, I'm not in it just because, yeah, it wouldn't make economical sense. I'd be paying almost more in taxes than I would take in income on that one. All right, next one is not a good one, yeah, at all. MRNY, Marnie, paying out 40 cents. That's decent. I mean, that's very good. It's 73% compared to its share price. If you've been following MRNY here, it's been paying out consistently around the 57 or 50 cent range here if you look at the last 6 months. Yeah, not bad. But if you look at the Marnie stock or ETF price, just miserable down here at $7. It's setting itself up for a reverse split for sure. If you take a look at the last 1 year with this, down 61%. Not something that I'm interested in, and this is what worries me about YieldMax is that decline. If you have a company that's just slowly declining, or maybe the spikes are too high and too low, like Tesla, it's hard to write covered calls and synthetic options on that company. For me, that's a no-go for sure. On top of that, I'm not super interested in 37 cents or 47 cents at all. But yeah, there you go, Marnie. I know we have some investors of Marnie in the room, and tell us how you're feeling about it. Next one on the list is the brand new baby over here at YieldMax. Also, I'll link the videos I've been posting about PLTY. I might be one of the only YouTubers out there making videos. If you're interested in PLTY content, make sure you go like those videos because I'm not sure how long I want to do those videos if there is no real interest. But after today, there might be with a $2.20 distribution. Doesn't have a distribution rate here. I don't know how they're paying out $2.20. I've done the videos over the last 4 weeks. They lost 3 out of 4 weeks of their weekly calls. I don't know how they made $2 to pay out to you. I hope they're not stealing it from the NAV to put it in there, so that this ETF came out at $50 when it first came out, and now Palantir itself has done very well over the last month, and you can see a major climb here of PLTY. So if you're invested in PLTY, congratulations on your increase here. 15% in 1 month, and that 15% really came in the last 5 days here. In fact, it came since this Monday was the big day of the shift, and then even more today with the recent election news. Palantir is an AI stock here, absolutely ripping over the last 6 months and over the last year here, up 199% in the last year. Palantir just had their earnings call 2 nights ago. They talked a big game about AI technology just expanding, and being an absolute dominant force out there. I like Palantir a lot, that's for sure. I'm not invested in it, but I do like what they're doing for their investors, and I think they have an incredibly bright future. Again, not stock advice at all. Of course, I'm not invested in it, right? So, um, I'm not putting my money where my mouth is. That's for sure. But after listening to that earnings call, I think they're definitely a company of the future that's happening right now in front of our eyes. Let's take a look at PLTY just quickly here. The other day we looked at it and their net assets were 6.13 million. Let's take a look at it today. It's gone up to 7.08 million. So this fund is gaining traction. If you're a PLTY holder, you've made a $50 investment when you first opened this fund just 1 month ago. So $50 a share. You're getting $2 today. How do you feel about that distribution? Are you feeling pretty good about yourself? $2.20, even better. I'd be feeling pretty good about myself, but I would be worried about where they got that money from because they did lose 3 out of 4 weeks of their calls. So I'd be very concerned about that. Also, if you're new to PLTY, understand that on the X dividend date, that 220 is coming out of the price. And I mean, you're already up if you invested on day one. You're up quite a bit, but that will be coming out of the price. And who knows what will happen tomorrow, the day after, or the day after that. So that is all of the ETFs that are paying out on week 2 here of the 4-week rotation over at YieldMax. Which one's your favorite? Which one's an up and coming? Which one are you thinking about adding? Comment below. Let us know. Hit the like button, by the way. Also, I'm trying to get to 2,000 subscribers by December 25th. If you haven't yet done that, please do it for me. I appreciate your support. We need you now more than ever. Tomorrow, I'm going to make a video on this NVDY announcement. I'm also going to talk about how much NVDY has made me so far, what I'm doing with the NVDY money. I'm also going to talk about Misty tomorrow, MSTY, how much it's made me, what I'm doing with my Misty dividends there too. So stay tuned for that. If you like this content, again, like and subscribe. Also, I'm going to go ahead and post this tonight. Remember, I am putting chapters in to the video so that if you don't want to sit there and watch me talk about MRNY, I don't blame you. Hit the chapters, watch what you want to watch. But yeah, I definitely appreciate you tuning in tonight. I'm going to end it right there. My name is Mike. This right here is Health and Wealth, and this is a video on Group A. I hope you have a great night. Thanks for joining.